Hello, Warriors. Good turnaround Tuesday to everybody. That goes to you, Richard. You beat Alexander's not here yet. Hugo, how are you? Everyone doing okay?
Morning, Dale.
And Ryan's
Morning,
back.
Dale.
Ryan
How you doing?
came in. We're at full strength again.
Full power,
So-
Mr. Sula.
Come on, West Ham. That was a good
Come on,
result.
Lions.
Anyway, sorry. Carry on.
Morning,
That's
Stel.
Morning.
all right, so see my screen okay, guys?
Yes,
Yes,
sir.
All right, so I was thinking for a turnaround Tuesday trade, maybe fade the dollar here. And one thing I've been telling people that, listen to me is when at least have the patience to hear me, that it was very important to see what the strength of this bounce off major support in crude was. And this was about 5-6 days, and the magnitude's much larger than the same TF of 5-6 days here. Looks weaker and, still looks like a descending triangle to me. So enough of me. You guys have been away for a while. Came in, what a monster. And Ryan, what a monster. Oh my God. I mean,
Yeah.
what can you
That's
say?
been a runaway train, right?
Yeah, you don't see him too often, but
Just keep
I
going.
remember Blake showed that major breakout of an 8-year downtrend or 12-year downtrend, and that certainly was an important breakout
Yeah,
in reflection.
yeah.
So
The-
what do you think?
Well, this morning we had what I would call the next step on the intervention rhetoric ladder, which was both Suzuki and Matsuno. I'm trying to find the exact line back from earlier this morning. They said that they will talk with the US when they will decide to intervene or so. So we had the next line really in intervention. Oh, here we go. So it will take appropriate steps on FX policy while communicating closely with the US and other currency authorities. It's a next step, but
Yeah, so they're looking like for a plaza accord for the yen.
well, I don't know who they will really get on board, apart from perhaps the US to curb the yen weakness. Because if you look at the rest of the dollars, okay, the euro is low, let's put it that
Yeah.
way, but not really overly weak. If you look at the crosses, euro yen is still a lot higher as well. So will they get other people on board to eventually let their currency strengthen against the yen? I don't know. Weaken against the yen. Sorry. I don't know if they get many people on board. We are not talking about the Louvre Accord where the dollar was like flying against everybody back in the 80s.
Yes.
Against everything. We are talking about pure yen weakness. And if I were saying, if I were seeing the Bank of Japan intervene now, my opinion or my first reaction would be they are going to be on their own. So we will have to see what exactly will they do. Will they just sit on top and let the market pay them out? Will they try to smash it down, or will they just slow the move?
I think
three possibilities for the interventions, if and when they will come.
But aren't those comments more sound like, rather than trying to get collaboration on the currency, just to almost like permission that we may have to enter, so be aware this might be what we're going to be doing, rather than can you help us out here?
Yeah.
Is there anything systemic about this? Since it's such a huge move, is there anything that could cause financial problems with the yen this week?
Well, it does create financial problems over
Japan.
locally for them. because the last one came out a little bit positive again, but they are also been struggling since the pandemic with a negative trade balance and especially a negative current account. The question is where can they put the yen to give a signal to the market that this is enough? They will need help from the Bank of Japan, I think, to let the interest rates rise. Otherwise, it's going to be a temporary plaster.
Yeah. Okay.
But it doesn't help when your Fed members coming out more bullish as well. You know, we had Bullard talking, 3/4 of a point rise. Okay, this is Bullard, Mr. Extreme. So they're getting two kicks up the arse, one from their own side and one from the dollar.
There's yields, but way outperforming the move in yields. I mean, it's a monster. I mean, there's no other adjective for it than monster.
That's the first thing I checked this morning. Coming back off the holiday and seeing dollar yen up there, I thought, well, yields must be over 3% by now, and they're not, and they're not looking like they're going to steam higher right this minute. So there is a bit of a detachment from the yield story as far as the US yields go.
Well,
where do you pick a top? If everyone and his dog is looking at 130. You got to think if we get up there, that's a level where people have talked about they might step in. Are we going to see it blow, clear everyone out, and then that's when the top goes in?
I know that K-Man's not a fan of the euro, but Ryan, I want to ask you. Okay, so the ECB couldn't have been more dovish, could they have?
No, I don't think they could have.
All right, so everyone had their stops under 108.06, and this time down the RSI, but forget the RSI. So people get stopped out at 108.06, and they go, okay, I'm out of the and it broke another 40-50 pips, and they go, okay, it was a good stop, I'm glad I'm out, I had my stop in the right place. But here you are, a couple days after it, where the stops were elected. And then you think, well, was it a good stop? You know what I'm saying?
Yeah, no, I get what you're saying. We were all expecting a crap out one way or another. Either, as I said before the meeting before I went away, if they did say something hawkish, I expect a spike and then probably 108 break in afterwards anyway. And we didn't get anything hawkish, and it got slammed down straight through 108. That was a level again. A lot of eyeballs on it, as you say, Dale. Flush them out. But I think I find no reason why the euro goes higher meaningfully on the fundamentals or anything else. So I'm expecting a further test lower. Okay.
And yesterday in gold, Stel, I don't know what you think, but right now, could that have been a failing rally up here? At 2000, I know Blake had a 61.8 fib up here.
Yeah, it was it's a day of low volume, low liquidity, so you take those with a pinch of salt. But it does look like a not very nice candle. And if you look at the minute by minute chart, it's always when the U.S. markets open. When 8:30, well, it's 8:30, right? You get a push down in metals almost every day. It's like clockwork. But I still think we're consolidating. I think we're going to break out higher, but we're consolidating. So I'm not celebrating yet. Although I like the price action, I like how we're grinding, but not 100%.
You didn't miss a whole lot. And welcome back, K-Man. K-Man, good to have you back as well.
Aloha.
Yeah, aloha. Aloha is right. Things have been pretty quiet, but I have to say, I actually shorted the dollar yen yesterday when it was at this 161% extension, and for the third time in the last 2-3 weeks, I got rolled over again. So I got stopped out above 128 overnight. I had to give it a shot. But obviously, it's funny, and it's fine because my trades elsewhere are working just fine the way I want them to. So my P&L hasn't gone anywhere. But I tell you what, my P&L would have been moving higher if I stopped stepping in front of the in front of the dollar yen. But, you know, whenever we get to a golden fib, it's like that for me, it's always worth taking the shot for me, even when it's such a big move. You know, and I still keep my position size small, but man, that thing just continues higher. So are we going to be trading towards 130, do you think?
Well, if MOF doesn't step in, I don't see what's going to hold it back.
Yeah,
the market is now also geared up towards such a move. I had similar level on the dollar yen around 127.40 ish. Bit of a possible target trend line, but it's just there's no stopping. And then if Bullard says 75 points, I might consider BPs.
I was going to say, how many? Listen to all the hawkish comments that have come out overnight with all the Fed governors, and it's like, holy cow! I mean, you know, you look at the dollar and you're like, well, I don't know what's going to stop. Well, first of all, look, I guess I can take the dollar yen, and I can take the strongest correlated pair, US dollar pair to the dollar yen, which would be the dollar Swiss, which is also breaking some pretty key resistance. Well, at least it was just a moment ago. Whoa, what happened here? Might also be noting is, you know, I guess on the Ukraine-Russia front, you know, some people are speculating this might be like the last leg of, you know, Russia's advance, you know, before the summer, and may pull back a little bit, reassess. And if things do, you know, calm down a little bit in the Russia-Ukraine situation, maybe that's something that will also be a tailwind for the euro to go higher. That's something to also think about. And also, we're seeing a reversal, and I know you guys talked about it earlier. And Stelios, I didn't get your comments, but what do you think about that reversal in gold yesterday? We were looking at it in the morning when it was just you and myself and Dale here, and you know, as we were approaching that 618 retracement, which is 2004, we came really very close to 2000. We reversed yesterday, gave us a little bit of a false breakout, if you will. Any thoughts on precious metals here? Because with precious metals reversing, maybe that might be a little bit of a foreshadowing of the dollar maybe to pull back a bit.
Yeah, maybe. As I said before, it's a day where I wouldn't trust the price action that much because it was illiquid. But yeah, it was not a good end of the day. It was looking very, very bullish in the beginning. You know, I wouldn't read too much into it, but yeah, the daily candle definitely doesn't look that good. So I'm still a little bit cautious. That's why you're not hearing me, you know, celebrating and saying.
Yeah, well, you know, and if I was a gold bull, and you know, I mean, I let me take that back. If I was trading gold to the long side, you know, and I wasn't, you know, I didn't have any position in it, but if I was long, just from a trading perspective, I would start worrying on a move back below this breakout point here. You can see that there's a spike low right there at 1960, 1961. That's near this breakout point right here, which is around 1965. So if we start getting below 90, or technically intraday, you know, I'm staying short as long as we're below the 618. So basically below 2005. And if we break back above here, because it'd almost be like a break even stop out, because I got such a good price yesterday. But even if we rally back to 2020, I would be a willing seller up here. I'd be more than happy to short up here and look for that eventual breakdown. That's what I'm going to be eventually looking for. Hey, really quick, Nisako says, I'm 19 and I'm from South Africa and I'm learning the markets. May you please recommend some books that will help me in this journey? I've got some great recommendations. I'm sure you guys do as well. But I want to say you found yourself in the right spot. The one recommendation I can give to newer traders is that we are here every day. And if you listen to this broadcast that we have every single day at the same time, it's a half an hour. The more you listen, the longer you listen here, the more you're going to pick up on things, and you're going to learn a lot quicker than just trying to, you know, go in multiple places. We do talk about a lot of advanced concepts. We do talk about a lot of macro ideas, but having that understanding of what's actually moving the market is equally as important, if not more important, than actually learning the charts. Anybody can learn how to read a chart. You know, that's really, you know, anybody can do it. You know, but understanding the reasons why things are moving, that's why it's important to listen here, so you can understand what are the drivers, what's actually pushing the dollar or the yen or the Mexican peso, or you know, Fed policy or central banks globally. So glad you're here. I think one of the best books that you can read right from the start is go get any.
It's my book.
No,
true.
Not your book. I was going to try to avoid your book like the plague. No, I'm just kidding. Stelius has written a book, but that might not be the best for a trader starting off.
No.
How about a Mark Douglas book? Anything about trading psychology from Mark Douglas? He passed away a few years ago, but his books are great for traders, you know, in my opinion. You guys have any recommendations here?
Yeah.
I would say Schwager's books.
Yeah, my old mate Greg Michalowski, Attacking Currency Trends.
Greg, yes. And by the way, yeah, that reminds me, Greg's my old neighbor who lives here in town, and I really need to get together with that guy. You used to work with Greg.
Yeah.
Isn't he? He's a great guy, isn't he?
Yeah, his book is it's probably one of the best foundations for inexperienced traders you can get. He really drums in what we try and drum into you day by day today. You know, learn the discipline, risk management. You know, there's no guessing involved. You just got to drill yourself, and he explains it very well. Always has done.
Yeah. So his name is Greg Michalowski, and he's a longtime friend of mine. He lives close. He lives just down the street from me. And let me pull up that book so you guys can read it. You can see it on the screen. Go ahead, Steve.
I'll clip this segment and send it to him with some with an invoice for, you know, marketing costs.
Let's see here.
The same for Stelius as well, then.
Yeah.
I'm trying to. What other recommendations do you have?
I think a few people.
All right. Well, hey, we got 3 minutes before Dale's got his interview coming in.
Yeah, Gary actually was able to log in today. So
awesome. That's great. So we got just a couple of minutes. I just wanted to make sure everybody sees. Remember, the S&Ps, we've been locked in this, like, you know, descending channel. We're hovering above the 50% retracement of the trend lows to that most recent high. 50% retracement comes in just below where we're at. I think we are trapped right now, but I think that the market's going to find its way this week. So if you guys are bulls, you know, you need to move above 44.30 really to unlock some upside, if you will. If you guys are bulls and you're just waiting for an up move in the market, that's where it's going to manifest, I think. And then also keep in mind, if we break below these trend lows, we're probably going to go right down to the 618, which comes in around 4,300. And just for the record, guys, for the record, I was right, and the rest of you were wrong. Just for the record.
You're right. Yes. Oh,
that's right.
Great one.
That's right. That is right. Just when we were here, and I said,
I'll once again toot my horn by saying that I'm the only one short here
all day long. You guys,
I'm the only one short here.
You guys missed the upside target by 2 pips, and we hit 4,400.
Good enough.
4,600.
Good enough for spreads.
As Dale said, good enough for government.
We've got some housing data coming up.
Yeah. Housing data coming up
for March. The NBA that I watch weekly has been really rubbish for weeks now. This data might be a bit early to see that coming through, but I'm going to start expecting it from at least April onwards to potentially see some some bad housing data, and if that's the case, that's going to put
building permits, by the way, is a leading indicator for housing. Just a reminder.
So let's go over to our calendar. We're going to open Data Flash really quick. Let me move that out of the way. Let's get over to the charts. Let's see. I'm going to pull up the yen. I want to see the yen's reaction here.
They're slightly stronger.
Data just came out.
Slightly stronger,
yeah.
You guys are just hoping for a housing collapse. Ain't happening yet. Ain't happening yet.
Yep, there is a lag.
That is I just so you guys know, just where I live, I mean, and it doesn't matter if you live in an area and your housing if you own a home or you know, unless you're moving, it doesn't really matter what your home values do. I just feel bad for everybody in my area. For example, our homes have doubled in value in 3 years. Doubled in 3 years. And I feel bad for, like, I had my nephews over this weekend. We were watching the Suns game on Easter, and these guys are, 23, 26, and both with decent paying jobs, and the American dream is so far out of reach for them. It's not even funny, and I feel bad. Like, what do those guys do? What do the youngsters do nowadays? Anyway, I could go on and on and on about that, but housing doesn't look like it's stopping, at least where I live, which is crazy. But anyway, all right, guys. Well, I wanted to say, I hope everybody has a great trading session. Remember, if you're in the ForexAnalytix community, we're going to be going through the bias chart in just about 45 minutes on the morning edge. But I'm going to pass it over to Dale so he can talk to Gary and have his interview. So thanks everybody for joining us today. And Dale, have a great interview. And team, it's nice to have you all back. Having Ryan and K-Man back. We even have Amanda in the chat room. She's back in the chat room. So it's good to have the whole team back.
Yeah, we need your accents, guys.
Yes.
Right.
Yeah, we need the diversity. So
yes,
Steve, Stelios, we need more people than Greeks in here.
We're bringing them one by one.
Yeah, I'm trying to recruit others. All right. We got too many Greeks. All right. Thanks, guys.
Gary, welcome back to F.A.C.E, my friend. How are you? Are you unmuted yet, Gary?
I am unmuted.
Please. You are good. Me? I got you, Gary. Welcome back. And the share screen button is, you scroll the bottom of the screen, you'll see the green box.
You got it?
Okay, so last week you told me you had yep, the charts are
Excellent.
up. And last week you said you had a lot to say. Not much has changed in a week. I think the main feature is I've never, all the sentiment surveys, especially what the AA is lowest level since 92 or 93. Not a lot of bulls out there.
Yeah, but be very careful of that. Sentiment is so much different from bull to bear markets. Bull markets, when sentiment gets bearish, it stops the pullback, stops the little corrections, and gets the markets rolling again. In bear markets, it stops the bloodletting, bounces the market up, relieves the oversold conditions before tanking again. So you have to be careful. And I am not saying we're not ending bear markets. I'm just saying we've been in 70% bear market, about 30% bull market. And the amazing part of it is what's happened here. I forgot his name, just said the American dream out of reach. Who just said that. I've been blaming Jay Powell for 2 years on that. It's now coming to note how behind he is, how wrong he is, the bubbles he has created that are all popping. The question is, does housing pop? I'm uncertain, except to say, here is Lennar, here is Floor and Decor, which is everything you put in housing, Whirlpool, Toll Brothers. I can go on and on. So if
they've taken 30-40% hits with yields rising faster than most people thought.
Well, here you go on that. There's your yields, which for me, I'm not sure I've ever seen something like this, so persistent and unprecedented. There has been an absolute cause and effect to what we have been seeing. And where she stops beats the heck out of me. All I can tell you is that the bullish areas are about as stretched and extended and overbought as I have seen. And the bearish areas are about as stretched and extended to the downside and oversold as I have seen, but it still hasn't changed yet. A couple of days ago, I actually thought we'd start rallying some, and then we had another down day. I think we're probably close. That's the trees. My job is to get the major picture right, so maybe we bounce here. I'm not so sure the big picture has changed yet. I am seeing some climactic moves in some things, like here's natural gas. Kind of feels climactic, though it just broke out. So it may be climactic for the short run. I'm just been playing close to the vest because we're dealing with the most news-driven, noisy market. I think I've said this before, but I think it's worse now because
that was before the war.
Ukraine and Russia. So you just take your time here, be smart, know what bear markets look like, and don't be in them. I started with Charter because sometimes you get the most classic looking bull and bear markets, and sometimes the roadmap is simple: riding an ascending 50-day, riding down a descending 50-day, and every rally into it sells off. And those are your great clues. I love when people tell me technical analysis is voodoo and it doesn't work. Terrific. Meanwhile, all the account transfers that I am getting from so many people are laden with this.
70% hits on Kathy Wood stocks.
And I can go on. And this is not to indict anybody.
Do you send thank you notes? Do you send thank you notes to the brokers?
Never.
Okay, I'm just kidding.
And we never take on anybody else in the industry. I'm always asked about others, and I don't even discuss it because the business is tough enough. What we just try to do is teach good rules of the market and how they work based on time tested from the greats of Stan Weinstein, William O'Neill, Darvis, and the like. And I keep adding my own little wrinkles into it, every now and then. But when push comes to shove, when wrong, be wrong fast and be wrong small. And when right, try to run them out, which is very tough to do because even in the oils and stuff, that you've had some wild swings that would have taken you out of some of these commodity names a couple of times, and then they get going again. So my best advice again is just never lose big. And in a market like the growth arena, and this is the one thing I'm proudest of myself most, I've had hardly drawdowns in the last year while the growth arena, which I'm a growth guy, has been absolutely destroyed.
That's good stock picking.
It's just a matter of knowing when they're done and not knowing how bad it's going to get, but knowing when you're in a main downtrend and there's no reason to change. And I will admit, I took a couple of probes as I thought things were trying to put in a low. And in bear markets, you get great bear market rallies. I was stopped out twice, but very quickly and very small. And it's a little lesson for me going forward. So.
Okay. Who's your favorite guest on your radio show?
Well, I've had Stan Weinstein on.
Stan.
I had O'Neill on, but this is a while back. Stan doesn't do too many interviews now. I had O'Neill on many years ago. In the CEOs, I got to tell you, Scott McNeely used to run Sun Micro, great guest. So, we've had a lot, but lately we've just been doing markets and complaining about Jay Powell and socialism. So
you think they're going to go 75% like Brainerd, 75 basis points in May? Brainerd's talking about it.
No, I my guess is 50, And just to show you, and most people don't look at this, I'm going to put up something here. That's the 3-month T-bill.
Yeah.
Jay Powell is still here on Fed funds, talking about just economic and financial malpractice by this guy. The reason why rates keep going higher is because he's still done nothing. And maybe rates on the long end could come down if they do something. So we'll see. We're in one of those moments where, look, I've been complaining about the distortions that he created. It turns out it is just massive bubbles that have popped, whether it be the marijuana stocks, the SPACs, the short squeeze stuff, and then the inflation. I believe Jay Powell is 75% cause of it. And then you get into Biden and Ukraine. That's the latest. The Russia-Ukraine really accentuated it. And they're still doing nothing. If I was Powell, I'd be at 1.5% right now, if not more.
Okay. We're going to nominate you, Gary, but before we do that, any concerns about the lockdowns in China also playing a role in, some of the weakness here? And plus those shares, just China shares were obliterated.
Well, everything counts. There's your FXI. Let me elongate it a little bit. There's your FXI. And their economy has been heading south. No
one talks about Evergrande anymore. Remember that was big news?
Yeah. To me, like when I look at, let me get this up here. Alibaba here, and that's not even the old high. This is only going back to last February. It's just stunning. And again, from my first thing I wanted to say, it is a great lesson for every person about just being smart and not getting married, and understand that bear markets happen and they can be vicious. And I always talk about Citigroup, which is still down 90% from its highs of 2008, did a 1 for 10, and a bunch of companies went by the wayside. You just got to be careful. And then you got these bubbles. There's your Tilray climactic move up there. I can go through SPACs and left and right. These are the lessons that must be learned, because if you can, in the worst of times, in the rough times, if you can keep your capital up near the high water mark, financially, you're so much better, but psychologically, knowing you don't have to make back 40% after losing your you-know-what is a great thing. And there's a certain someone, and we don't mention them, so easy. You just worry, are these things going to come in here, into these areas? And if they do, if I'll get this working somehow, there you go. If they do, there's going to be more pain. So every day I'm hopeful that things are going to change, but it just hasn't. It's just accentuated. And now you got the Russia thing. So here's cotton. And I bring these up because it matters. Here's corn. Here's soybeans. Here's wheat. And I'm not a commodity guy, but I've become a commodity guy because I think it matters a ton to everything out there. Here's your oil and what that's done. And I just worry about what are companies going to talk about as they move into earnings season, because I know for a fact up and down the food chain, prices going up. So then there's
the Fed's not going to be able to break agricultural commodities. They may be able to break economically sensitive ones, don't you think?
Yeah,
like copper, or maybe oil,
potentially.
But they can't print corn.
You know what the problem is for the Fed? I think now, I think they're kind of off the table in that the market's dictating policy. The Fed's at 0.25%. The 5 years at 2.858.
Yeah.
The 10 years at 2.9. And, again, the moves have just been absolutely stunning. The 10 years gone from 1.1 to 2.9 since August, 10 months.
Yeah. The bond vigilantes have definitely had their lynchings.
And there's just no let up. And I think part of that is Powell's so behind. And the European Central Bank, they said in the last couple of days, we're not going to stop printing. and they haven't moved off their negative rates. So it's not just us, it's the lemmings around the globe. So we'll just keep our eye on the bouncing ball and recognize the market's talking contraction coming up. And how do we know this? Well, it's simple. In retail, I have Best Buy, which is stuff you don't necessarily need. But in retail, you got Dollar General at highs, which is recession resistant. In retail, you got American Eagle Outfitters, but here's Dollar Tree. The market is, even Walmart, the market in retail is buying up the most discount retail stuff while basically just killing. Remember when I was in LA, the first thing he said to me and a few other people, if you were one of the few that really understand and can read bear markets and just stay away from them, you are ahead of 99.99999% of everybody. And that's the first thing I worked on. And we think we've got it pretty decent. And the only time I ever screw up is when I try to be too cute. Like I bought a couple of things trying to turn recently and got stopped out twice. So to me, just stay away. Know that big fat pitches will eventually come around, and just be, smart about it. The one thing you can't hide is bull and bear markets if you know how to read the tape. So
and the bonds, most people, thought they had balance by having 20-30% in bonds, and that's actually been the worst part of, or at least as bad as the equity.
Well, there's your TLT. There's your LQD. These are just ETFs for investment grade bonds.
Why are corporates weaker than junk? Because people still want higher yield. I'm not saying junk is strong, HYG, but it's not as weak as corporates. See, that's not making a new low yet.
Yeah. You know what? Beats the heck out of me why. I think you may be onto something about the higher yields.
Yeah.
But I must think when all is said and done, if this worsens, junk's got to take a big one. I have said for a long while since Bernanke, and especially in the last 2 to 3 years with Powell, that I see bonds that should be yielding, and junk that should be yielding 9%, yielding 5%, and things that are yielding 2% should be yielding 6%. Excuse me, the other ones yielding 5 should be 9 and 2 6. And that's going to eventually change. And I think you're seeing some of that right now. So even the bond markets have been, whacked.
Sovereigns and munis now, Gary. I think that we could run into some problems.
Hard. And I think we showed you the last time. I'm going to back away from the chart for 1 second. The biggest issues I had, here's your central bank chart, which is outrageous. And I think also, and we showed this, the margin debt.
All right, we're still looking at GameStop. Must be on another screen.
Pardon?
It must be on another screen. You might have to do it.
This is not showing.
I'm still seeing GameStop.
Okay, my bad. Anyway, we'll go back then.
All right, go ahead, Gary.
I was showing the chart of margin and the chart of the money printing that went in lockstep. And guess what's margin's doing now? Margin is heading south. So margin is your best friend in bull markets. It is a big enemy in bear markets because that's got to come off first before anything else. And that's part of what you're seeing right now. And again, where she stops, don't know.
Okay, Gary, any comment on Twitter? I know Charlie Gasparino wrote a nice article about Musk. What do you think is going on there?
Well, I said when it was 55, just be careful. Here, I don't know what ends up happening. The bigger arbitrage, believe it or not, is Activision with Microsoft, 95 in cash, and you're not hearing a word about it. So there's 2 of them out there right now. Whether or not it gets done, I don't know. I tend not to play these things, and now we're in earnings season, so I take a step back. I did want to show here, Here's the NASDAQ.
Right.
If it takes this out, that means they're getting all the big names at earnings season. So just be wary of that. So far, it's holding up.
Do you give it a chance for being the right shoulder? I see RS over there.
Sure.
Oh,
sure.
Yeah, could be.
But that said, I go underneath the surface when I see the index and I see nothing but crap.
Yeah.
So,
okay, so
we're going to need improvement.
Sell rips is basically the theme I get from you.
Yeah, this second.
Return of capital, not return on capital.
The S&P stronger because of its makeup, and it has a lot of the defensive areas also. Again, we're going to know a lot, I think, in the next 2 to 3 weeks, especially with the Fed doing whatever. The Russell it has been the weak link, and again, you better, keep this. But I'm just going to go through a few. Here's the SOX. That is really some bad news. I got to show this. JP Morgan and Goldman. I mean, holy crap. I heard some analyst on TV patting himself on the back. He said he was bullish, and he was saying how right he's been. I'm like, what the hell is this guy looking at? So there's JP Morgan. Here's Goldman. It's just.
They should be doing better with higher yields, right?
Yeah. Here's the regional banks right here.
Maybe there's some Russian default exposure that could ripple through things. That's something hanging out there.
Here's the RSX, which doesn't trade anymore. So all I'm just saying is that be careful. I'm always a big believer markets do come around to where you really see big fat pitches. Anything that has tried to break out outside of the commodity space, there has been, and these are the distortions you get. And I'm hoping the guy retires, but he ain't going anywhere, and we'll just keep having to deal with it. And I'm just waiting for his next stupid mistake, which probably is he's going to tighten too much into a recession, and that would be bad news. So,
okay, well, Gary, appreciate you being here, and in honor of the baseball season, Gary Kaltbaum says, "Wait for your pitch."
And go Mets.
Yeah. Okay, so go. Wait for your go Cubs.
Okay, that too.
All right. So, Gary, thank you so much, my trading warrior brother. Love your passion and energy and some great looks today. Thank you for having a giving spirit and sharing your knowledge and views with us on F.A.C.E today.
I appreciate everything you guys do. The world needs to be educated to what we are doing, and that is very simple. Pay attention to price, because that's how you get paid, or that's how you lose.
That's how people vote, with their wallet, buddy.
You got it.
So I really appreciate you, Gary. Thank you very much for being here, and I'll get a hold of you to keep you in the rotation. All right, buddy?
Excellent. Stay well. Be well.
Oh,
thank you all.
Thank you very much. Everyone, Gary Kaltbaum, and you could join the team in 12 minutes on the Morning Edge. Gary, people enjoyed it. Monica, Laura, interesting. So that's a wrap for F.A.C.E. And again, like I said, you could join the team in 12 minutes on the Morning Edge for the bias charts. And really, guys, consider the trading funding program. It takes money to make money. And more than that, don't just count your pips, count your blessings. Adios. It's at Gary Kaltbaum on Twitter. Turtle in. See you guys.